demand for new used cars is building. That's going to drive an upgrade cycle in the car market, which Carvana is well positioned to take advantage of.
Thomas, your next small cap pick here has struggled for more than a year. What is going on with Carvana that made you add this struggling stock to your list to rotate right now?
Well, there are really two things driving my opinion for this stock. One, it returned to growth, and two, the analyst sentiment. So over the last year or so, the company has restructured and repositioned for the times, and it's now well positioned to sustain long-term growth. It's got a digital-first footprint, is seen as a major advantage, um, compounded by the aging car fleet. So right now, all of our cars, on average, are as old as they've ever been, at record age on cars. That means that demand for new used cars is building. That's going to drive an upgrade cycle in the car market, which Carvana is well positioned to take advantage of. Demand for new used cars is building. That's going to drive an upgrade cycle in the car market, which Carvana is well positioned to take advantage of. Not to mention the fact that Carvana's digital-first footprint adapts very well to AI, which is going to improve its own efficiency and profit margin, as well as driving customer satisfaction and growth. Now, as far as the analyst sentiment goes, the price target is still lagging, but they've been making some aggressive revisions this year. The consensus target is up 150% in the last year, mostly in the last 6 months. The freshest targets imply 20 to 25% upside and fresh multi-year highs. And again, the chatter among the analysts is that we're in the early stages of an upgrade cycle in the sentiment, which means that we should expect to see not only Carvana's results improve, but analyst sentiment continue to improve, which is a powerful tailwind for the stock price.
Sounds like some powerful upside coming for Carvana. Chris, do you see Carvana making gains for investors quickly, or do you really think it's going to take some time to build up equity for those who choose to rotate to that stock today?
not I'm not as confident as the analysts are. What I'm seeing is a company that revenue is down from its peak, and when the revenue was at its peak, it wasn't profitable, and so it's still not profitable. I agree with Thomas. AI could give this company a boost, especially in margins that might turn it into a path to profitability here. But without seeing that, I'm a little bit skeptical. Plus, I'm not really sure if the consumer is healthy enough right now, even though we are in a cycle where if interest rates come down a little bit, it should spur demand for used cars. But right now, I'm not as high on Carvana as Thomas is.